Welcome back, traders. And in today's episode, I'm going to be talking about a very crucial topic for all traders, not just beginners, and that is trading volatile markets. So, volatility can be quite intimidating, but it also offers a ton of opportunity for traders. And with the right tips and strategies, you can navigate these crazy markets and come out on top. So, today I have got 5 tips for you to help you as a trader of any level navigate volatile markets. So let's get right into it after the intro. Okay, guys, so before we go and dive into tips and strategies, let's briefly talk about what volatility is so we can have a better understanding of that. So, volatility refers to the degree of variation between trading prices over a period of time. So, it basically, shows the range of your price action in the market that you're trading. Okay. So high volatility, like I said, can present some great opportunity, but it also creates some challenges for traders. And it's essential for you to be prepared really for anything. Okay. So if you need an understand, like a good example of what a volatile market looks like, go look at the cryptocurrency markets. That's why there's a lot of people that go in and trade those on a daily basis, day trade that. All right. I day trade Bitcoin and Ethereum all the time. Okay. And that's because those markets have a very high degree of volatility. There's always some kind of price movements that you can profit on. Okay. But you have to be careful because there is a lot of risk involved. All right. And so, tip number one to really winning in a volatile market is always to stay informed. So, you've got to stay up to date with market news, economic indicators, different global situations that may be affecting whatever market it is that you're trading. Okay. So, for instance, we're looking, at the time of recording this, we're staring down the barrel of the SEC's approval or disapproval of a spot Bitcoin ETF. Okay. The news is all over the place. The market has been absolutely crazy. So you have to pick and choose when the right times to go into that market. So I'm personally waiting until a decision is made before I go and try to start trading because we don't know what's going to happen. All right. So that's just one particular example of a volatile market and the type of things that you need to be staying informed of. Okay. If you're trading, particular stocks, you need to be paying attention to earnings calls and things like that because that has a degree of volatility in those trades. So if you're trading on a day of earnings for, say, Apple, you want to know what their revenues and stuff's, looking like, what their expected earnings are so that you know which direction you want to trade that day. All right. So the second tip is to really just set realistic goals for yourself during these volatile times. Okay. It's very attractive to want to ride these big price swings up as much as you can ride them, but when it's time to take profit, take your profit. Okay. So that's why I have a particular set of rules really for any market that I try to catch just a certain percent per trade, especially when I'm scalp trading. If I'm swing trading, I go based on what the logical trading indicator pro tells me to do as far as based on buy and sell signals and trend changes. Okay. So as long as you have that set of rules for yourself, you can set goals. So I have a take profit goal that I'm going to take. So, no matter how much it's running, it's going to go out at my take profit point. Okay. Now, if I can find another opportunity to jump in and take another run, then I'm in it. So you can also go in and trade, using like a trailing stop loss strategy so you can chase the market up. But that's all within your strategy. If that works for you, then do it. But, using something like a trailing stop loss is a little bit more of an advanced type of trading strategy. All right. All in all, just set realistic expectations, you know, cover yourself, make sure that you are putting stop losses on, that kind of thing, and just taking profits when it's time to take profits. All right. So, a third tip is to diversify your portfolio. All right. So, I teach, especially when you're starting out, trade one or two assets. Okay. So that's what I do. And I still only trade a very small handful of assets, but I use those assets and the profit from trading those assets to diversify into other things. Like I have a homestead farm business that I'm trying to build. Okay. So that's me diversifying my money to another industry, to another investment type entirely. All right. You could take your profits from, your trades and go and put them into a dividend stock or something like that. So diversifying your portfolio overall will hedge you and your money overall versus major volatile times. All right. So like I said, I'm working on building my wealth with just a couple of assets, but I'm going to spread my profits out into other things as time goes along. All right. So tip number 4, and I mentioned it a minute ago, definitely, please, for the love of God, use a stop loss. Stop loss orders are your best friend, especially during volatile times, okay? Because you don't know from one minute to the next what the price is actually going to do, okay? So I may get a buy signal on the logical trading indicator, but the next minute the price is running the other way for one reason or another. So if it goes the wrong way too much, then I want to get out of the trade. I do want to give it a little bit of breathing room because, like I said, prices are moving. I want to give it some breathing room, but if it's going the wrong way too much, I want to get out of the trade before it gets too bad and I lose too much money. So, stop losses are your friend. Okay. Stop loss and take profits are your friend. Set the trade, let it play, and just see what happens. As long as you are trading with a good strategy, you're going to be in a good place either way. If you lose and you're still following your rules, that's still a successful trade. Whether you lost money or not is beside the point. But as long as you followed your rules, it is what it is. That's why you have rules for yourself. All right. And that's why you need to tip number 5, stay disciplined. All right. So maintaining your discipline in trading is essential. So emotional decision making can really be tempting, especially during volatile periods when the price is absolutely running and you're trying to chase it. Don't run on that FOMO. Okay. The FOMO is the fear of missing out. You don't want to run with that kind of emotion in your head while you're trading. All right. Because you will absolutely lose your butt every time. Stick to your trading plan, stick to your risk management plan, and keep yourself from really, derailing, because you can mess yourself up really hard. Just, a few mistakes in your short-term movements can really affect your long-term plays over time too. All right. You can really blow up your account if you're going into these volatile markets trading on emotion. So you need to stay disciplined and stick to your rules. All right. So to wrap up today's video, trading during volatile markets, it requires a combination of preparation, discipline, and strategic thinking. All right. You have to make sure that you're doing your research, making sure you're picking out those economic indicators, make sure you're following the charts, make sure that you're keeping up with the asset news, and stay diversified. Make your money in one asset, diversify it across the board. Once you start making your money, that will keep you, you know, a little bit more sane during these volatile up and down times, right? So don't forget to maintain your discipline though. Like stick to your plan. It will really help you along the way. And that's just not during volatile markets. That's really any time. Okay. So if you find this kind of stuff helpful, if you like these kind of tips and tricks, understanding, you know, what it takes, not just knowing how to trade the markets, but knowing yourself and knowing when you need to be in the markets is essential. Okay. So if you like that kind of stuff, make sure you like and subscribe. I greatly appreciate it. It helps me grow the channel, and it really kind of helps me, gauge what I'm doing here is the right thing, right? So I hope you guys have a great rest of your day. Be safe out there in these crazy markets and make sure to trade logically. Peace out, guys.